All right, guys, let's jump into review of the last week. We did quite a few trades because we are now introducing some additional trades in addition to our 1-2-1s, which are now getting stabled, and we have them down pat. We're going to start slowly adding some strangles, some futures, and some white iron condors, and I'm going to talk a little bit more about that and a couple of trades that I put on last week. The 1-2-1s still stay the main part of our portfolio. They're going to probably take around 50% of the buying power. And last week we added 3 of them. So let's just quickly go through the numbers and start with our performance for the last week, which was pretty decent. We finished the week a little bit over 2% up. And the market was up a little bit short of 1%. And what's nice to see is that we're catching up to the market, which we can see here on the year-to-date performance. We are in the blue. The market is in the red line. So we're going up, and we are right at around 50%. So hopefully this trend continues. We continue to go up, and on the longer-term performance, same thing. We're securely ahead of the market, and we're on track for 20-something% yearly return if it continues like this. But hopefully with introduction of some new trades, we will improve on that as well. And let me talk about the trades. So first, let's take a look at the last 3 trades. Those are right here. Monday, Wednesday, and Thursday, we added one per day of the 1-2-1s, all in the same expiration. That's the one that was around 80-something days out, and same expiration for put debit spreads. And those are just standards, standard numbers here, just a little bit higher than usual because the VIX has been going up slightly. Not much, but a little bit. And as you can see here, it was 18 on this day. So that gave us 2 things: a little bit higher premium, but also we're a little bit further away from the spot price. Like if you can see here, we are 14% below the market, and then here we are 13 as the VIX kept dropping. So this is one of the reasons why we prefer VIX to go a little bit higher. And it's actually a little bit safer and gives us a little bit more premium. But yeah, that's all on that. Let's go and look at the additional new trades. So we're going to start off with 2 things: strangles on the smaller products, like mostly currencies, and then white iron condors on some larger products like gold, bonds, and the like oil and things like that. Now, I'm not a big fan of the classic iron condors where you're defining your risks, and I'm not really big on that. But this is different. This is a widespread iron condor where we are not defining the risk. The risk is still much larger than our max loss. So we are actually trying to define or to lower our buying power required per trade. And this allows us to trade a little bit larger product that we would not be able with the size of our account to do comfortably in a larger product. So we're going to go over one of those trades just to give you an idea of what it looks like. But here are the numbers. Like, for example, we put yesterday gold, white iron condors. So normally you would put probably 6 or 7 delta call and put and call it a strangle. But then we added we bought call and bought a put 100 points away from the short strikes, right? So that gives us a reduced buying power, and you can see here it's 17, right? So roughly 1,700 buying power required, and otherwise it would have been 34. So about double. We cut the buying power in half. It also gave us a little bit less premium. I think it was going to be around a little over 700, and because we had to pay for the long options, we reduced it down to around 450. and which also plays into our overall theme, which is keeping the max loss at up to 2% of the account. So if the account is around 50,000, we don't really want to risk more than 2% or 1,000 per trade. So if the premium was 700 or let's say 750, our max loss would be 1,500, which is 3%, and we don't really want to do that necessarily. So with premium being 450, max loss or stop loss, assuming we are able to get out on time, of course that doesn't always happen, but in theory we are trying to get out at 200 max loss, so that would be 900, which is within our 2% max loss rule. Same thing goes for the ZB here, the 30-year bonds. We collected 500, and the buying power required is 1453. So those numbers play well. We're looking for 50% profit, and the commissions are a little bit higher on this when you do it like this, because you have four lags, so 25 roughly dollars per iron condor, so you have to take that into consideration. But we're looking at 50%, which should happen in assuming everything else staying the same. It should happen in a little bit over a month. Obviously, if the volatility goes up or the underlying moves around a lot, then that can take a longer time, or it can turn into loss, but that's what the plan is. So strangles, those are on the smaller product and mostly currencies, but we'll try and put one of these on per week, and on these we're looking at 300% loss. So we're going to give it a little bit more room to work out, and we'll see how that performs versus 200% loss. So, but we still keep the 50% target for the profit taking, and hopefully that should also happen in about a month or so. So we should be able to put 4 of these on at any given time, and then as our account grows, we can start putting more double contracts, or maybe go up to 5 weeks, depending on how long they will be taking to close. So we'll talk about that later. In later videos when we have some trades going on. So right now, let's quickly take a look at the Greeks. So this was recorded a little bit before close, and the numbers on the platform change a lot afterwards. It shows, the minus, it shows like a loss on the day. It shows 17 deltas where we have a lot more. Same with theta. So the numbers are not reliable after the close. So we don't go by that. We just go with whatever we recorded before the close. And we're getting a little bit high on delta. So we're at 0.2. So we don't really want to go much higher than that. So we'll be monitoring that. And then we have 15 trades, one-to-one trades on. And let's take a look at the actual platform. So here is the Euro strangle, and as you can see here, this is on a 69, currently 69. We put it five days ago, so it was 70 something, and we are down 24% on that one. So that's all fine. We'll just let it go, and we'll see how it works out. So let's take a look at the gold strangle. So to do that, let me just show. Let's assume let's do a similar trade now, and keep in mind the pricing now, it's off, and the deltas and everything, so it's not reliable. But just to give you an idea, so if we let me just clear this, and let's assume that we were doing it now as a strangle. If you go here, you can see that it will take a little over 3,000, and we would collect $710 for the strangle. So this is what I was talking about earlier. And let me see the deltas. So this one is at 4 deltas now, and this one is at 6. So okay, so it's pretty close to where it was. And the probability of profit is 92%, as you can see right here. Oh, let me see if I can turn this on. Okay. All right, 92%. Now, So what can we do if this is a little bit too large for us? Again, with the $50,000 account, this might be a little bit too much of a risk here, and it might be taking too much of our buying power. So 21.85, if we go to 22.85 and buy a wing here, and we do the same thing here where we are at 17.65 and buy the wing and 16.65, we're now reducing that buying power. It says 1800. It was 17, I think, when I put it on, but that's roughly what you're looking at. And then max profit is at 450. So now our max loss is 900 as opposed to 1500, and the probability of profit stays the same. Now I could maybe just put the strikes, the short strikes in by a small amount to kind of compensate for the payment for the longs, but in this particular case that's not necessary. I can just add the wings and still have a decent profit potential. And what I look for is a minimum of 20%, so 20% on capital, on buying power. So 450, if you take 450 divided by let's say 1860, you're looking at 24. So that's well within what I'm looking for. And so that's on that. And it's a similar thing if you look at the let me see here, this let's look at the ZB, and let's just quickly, let's just open that expiration real quickly. So close position and clear. And let's see, we have a call here and a call here, and that would be that would require 2200 in buying power with a max profit of 609. It's a slightly less probability of profit on this one. And now this we could go with this one. It's pretty close to what we're doing, to what we're looking for, 600, 1200. But you know, just to keep it consistent and stay on track, we are adding little wings way out of the you know, way out there. So we're lowering the max profit to 540. You know, these numbers, let me just see if this was what we sold it for. What did we do? We got 500. So the market, no, I'm sorry, cost, 500. We got 500 for it. So the market moved around a little bit. So the numbers, you know, are roughly right, but not exactly right as they were at the time when I put the trade on. And you can see here the buying power is reduced. Now, yes, adding the wings makes the trade a little bit slower, so it might take a little bit longer for it to you know, for us to get to 50%, but you know, it still should be just a little bit over a month, hopefully. And then you can see here that max loss is still 15,000. This is not a classic iron condor where you would go like something like, you know, just putting say something very close, because that changes the whole game. That's no longer the same game. Now here you're defining your max loss to say 1900, but you're also cutting your profit completely. And this trade is, you know, pretty much useless. I would never put this trade on. So anyhow, this is it. And what else? So we're going to be doing some changes to our spreadsheet here just to account for the additional trades. There are going to be some other columns and stuff, but we'll talk about it when I make the new spreadsheet, or when I update this spreadsheet. So everything is going fine. We're on track, and let's see what the next week brings. Have a good weekend. Thanks.